Hi everyone, welcome to today's weekly commentary. Okay, so we're having a more like a refined zone for this week. All right, so I'm still bearish on DXY in terms of overall. So I'm still bearish, but I expect market to trade into this support level. We have been expecting market to trade into for over 2 weeks now, right? We're expecting market to trade into this particular. Okay, so the current resistance level we have that made a low right here now, all right, in terms of high swing point resistance high is this. And market has tested it there on, all right. Market has tested this resistance level. Okay, so when you look at it or when you zoom in, we'll have a new resistance level right here. Okay, we'll have a new resistance level right here. So these are our area of interest where we expect market what to sell. Okay, where we expect market to sell if entry is given for a sell setup. Now, that does not mean this is not also important, but this is just what for this week. This is just for this week. So since market has been this low, so this become structural high. And when you look at it, this is what a liquidity right around this high. All right. So market can come fast and take it before dropping, or market can continue dropping on these two levels. So these are kind of view, but my overall view is what market what just continue dropping from here. Mostly this current resistance level downside is possible just here. Drop into this support level right here. Okay, so this is my expectation. Now let's look closely into those resistance or support level. So on this H1 time frame, we see our price has traded into this resistance level right here. Okay, the market has traded into this resistance level. So meaning market is what mitigated structure this time frame. So on the lower low, lower high, lower low. All right. So look like it's what it's trying to form what lower high. And when you look at it closely, you understand that what the formation market is giving us is what market this high illiquidity by giving us what engulfing. Now the reason I call it liquidity is because this is what engulfing candle. So you see this black candle engulfing this white candle. So that is kind of like a clear reversal pattern or clearer reversal pattern. So since market gave us what engulfing pattern right here from resistance level, so that shows what market intensity would drop lower. Right? That shows market intensity to drop lower. So which is what a good level of mitigation. Right? A good level, this resistance level right here, a good level of mitigation. Now let's look at BTC. On BTC, I'm expecting just like when I marked it, that was it on Friday? Yeah. So I was expecting BTC to at least on Friday was on Friday around that time was around here. So I was expecting BTC to drop, right? I was expecting market order to get to this level before we look forward a, a buy. And you can see that market will probably watch this low out. Why? Because we have tons of liquidity right here, right? Liquidity we have here, we have this, we have this, we have this, we have this, we have this little low, we have these two. So market tested this level multiple times, meaning there is what a lot of orders around here. So when market levels like this, you understand there's what a lot of orders. Okay. So since you understand there is what a lot of orders right here, you can make market what read this particular low. Right? You can make a market read particular low. But if market break this high, probably this high, we can see price getting higher. So that is that. So you see how market induce this high right here. Even on lower time frame, if you look at it from M15, because I studied, I was actually monitoring BTC. That was at this week. You see the same thing, the same type of liquidity was enough liquidity right here. You have this, you have about highs, these. Market tested this particular level multiple times. whenever market tested a particular level more than, let's say, 2 times, 3 times, that level becomes weaker. The more price test that level, the weaker that level becomes. So that is kind of like a liquidity pool. Like that level attract price. Markets always would look to what trade or induce such high. So that is what called liquidity pool, right? So a liquidity pool. So market what came to rate. It's ready to what with strength. So you can see a fast movement right there. Broke this low. So after breaking this low, if one would have looked for entry after inducing this particular high, this kind of inducement, just one single high. So because the reason why I call it one single high, because this high is the one that made this low. So making this what liquidity or inducement high, plus this all this liquidity that tested this particular level. So one now can look for what is sell around here. Then on lower time frame, you refine it. You see, if you can't refine, having a stop loss like this, it's not bad. Okay, having a stop loss as far as you have what clear target that is up to 1:4. All right, clear target that's up to 1:4. So it's not bad. You have a clear target that is up to 1:4, and the reason why you are targeting that 1:4. So around here now, if you target this level, you see there are some liquidity right here. Now this does not mean can always come to your liquidity level, but this area has what a lot of what liquidity. Why? Because what market tested that level a lot of times. 1, 2, 3, 4, almost 4 times. So whenever market a certain level up to 2 times, it is okay for market to come and touch it the third time, maybe probably what rally. But when it touch it 2, 3, 4, at least 4, that level become weakened. All right, that level is totally what it has what a lot of what liquidity or a lot of what orders right there, because a lot of people click by let's say take for example here, a lot of people bought from here in this first leg, from that first leg, this first leg right here, a lot of people bought from 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 here. So when there are a lot of people buying at one certain level, that means what is what tons of what in liquidity resting around that level. This common sense in terms of understanding liquidity, right? Use common sense in terms of understanding liquidity. So if you have a sell setup here, no problem. If you have any reason to refine it, maybe using proportion block. But if just like I posted of recent, right? Though I don't kind of like explain deeply into this part. So one thing you have to understand as a trader is market is always right, right? So if you is a scalper now that want to take this sell, will probably what look to what enter or refine his entry so that he can maybe he's not trying to maybe stay in the market up to this particular level. All right. So he's trying to maybe catch 1:4, which is probably around here, and leave the market. All right. So you shouldn't maybe be setting your stop loss like this. Yes, that means it can take you more than a day. All right. This can take you more than a day for the setup to get to your TP. So it's no longer what is scalping setup. So if you scalper, that means you have more work to do because you will do more in terms of refinement. But if you're a swing trader and intraday trader, there's no reason for of you refining. So the main thing is what you know your risk management. You're risking 1%. Your stop loss, even if your stop loss is 30 pips, your stop loss is 10 pips, your stop loss is 5 pips. Your risk management must always be the same. So you can use what my forex book to do the calculation for your stop loss and all. So that is this can be what good fed trade. That's what a bearish trade. All right. This can be what a bearish setup. That is that on BTC and US and USD. Now on gold, we see price rallying to the upside right here. And this is our current structure range on H4 and let's say hourly time frame. This is our current structure on hourly time frame. Since this is our current structure on hourly time frame, after market trader into this imbalance right here and continue the rally to the upside, we can now expect market if it gives us what right, if we just wait for market to trace into this range before we start looking for buy again. So and we have this kind of long week. So when you have a long week like this, there are sometimes orders in it or balance within the week. So you can have it as what a POY and balance like this as a POI on good. So if market comes to this level, we will look toward go long on the pair. Going long on the pair, you have what Quasimodo level. So if you don't even want to pick POI like this, you can have what Quasimodo level candle picked this particular level as your POI, but you have candle that react regard to this Quasimodo level. So whenever I have this type of candle that reacts to Quasimodo level, I always pick that candle. So that will make me to pick this level. If there's no candle like this, and there's no candle that react to Quasimodo level like this, I can pick what the Quasimodo level my POI, especially when it has what balance above it. So that is another rule. Yeah, you can pick as your POI. So you have this on good. So this is my expectation on good. Now, this does not mean the sell will start instantly, right? So the main deal here is this: if market continue the buy movement or the bull run, you wait for what until market give you what clear change of what direction or clear change of character for market to come to this level before you start looking for buy. So after the change of character, you have your minor break structure right here. Is a change of trend that is from this uptrend direction to what a downtrend. So you expect market to what to sell off trade to this level. Now, this does not mean it can come to this level instantly. At least we have what little liquidity right here, like resting right here. So since we have this liquidity right here, we can also have the two POI, this as the main POI. Then right here, there's on this M15, or on this H1, there's what is short-term imbalance right here. There's a little imbalance right here. So you can have this imbalance marked out. If market come into this level and trade into this balance, gives you a reason to buy, you can expect what a buy movement to the upside. So these are the two areas. So since this has a liquidity, and this low is kind of like internal structure that market can use also as liquidity, but it doesn't have that kind of like um, a cluster liquidity. So all right, so you can call it what inducement. Market can come and take over. And so that is that on good. And that is that in terms of the technical part of the market. Now we have the news we're expecting for the week. Monday we have at 15 a.m. we have a lot of news on of French and German news. And around 9:30 again, you also have what GBP PMI news. So these are PMI news and they are very, very important. So you should watch out for them on Monday. Tuesday, we also have some news on US on the AUD. Is their bank rate statement, which can what weaken or strengthen the currency. The same thing on what Japan currency. That is Australian. We have Australian dollar right here. And Bank of Japan right there. So on Wednesday, we also have what CPI for what AUD is what another important news Thursday. So these are kind of all the news we have for the week, right? These are all the news we have for the week, and that is all for today's look. So good luck, good trading.